All right, guys, welcome back to class. Andre here, and this is HRC Studio. All right, so I started this particular series by teaching you guys structure first, and that went really far. A lot of you love it, and structure part 1, part 2, and you were able to see markets in another dimension. Today, we'll be clarifying, will I say the topic is kind of controversial? Well, not exactly. I will not say it is controversial, but what I'll be doing to it is to bring justice to the debate between supply and demand, order block, and fair value gaps. And the reality here is that all of them, there is only one thing that links them. And that one thing is what we want to talk about today. We want to bring clarity to it. We want to ensure we finish the debate once and for all. All right, no more debate. Let us look at what brings supply and demand zones now in relation to your fair value gaps, order blocks, and the likes. Only one thing, and that thing is imbalance. So today we'll be talking about the two major types of imbalance that we have. Why is supply and demand not different from your fair value gaps and your order blocks? So what are we doing today is to bring raw understanding to everything that you have been taught about these things. I will bring you to the foundation. I will let you understand exactly what an imbalance is. Because of course, when you're picking supply and demand zones, you will say that it is an imbalance, to seek an imbalance. Your order block, an imbalance, is what price is trying to repair there. Fair value gaps, an imbalance. But meanwhile, fair value gap is just a type of imbalance. And the idea of it being the gap between two candles, all right, between two candles, or three candles rather, between the candle in between three candles, the high and the low, when it does not touch each other, that is the high and low, or the low and high of the first and third candles, when they do not touch each other, being fair value gap does not justify that. In fact, it is a guesswork if that is what you are doing. Why will you see a lot of fair value gaps and only one will be gone for? And this is what I want to bring justice to let you know fair value gap is just a part, and in fact it doesn't justify, because we only have two major types of imbalances in the market, and structurally you can know exactly what an imbalance looks like. On my Twitter page, I posted something about this, now X, right? I posted something about this, I told people to study recently, maybe last week thereabout. And that's why I'm making this video, to bring clarity to exactly that post so that you can understand better what an imbalance is, and you won't have to be given BISI, SIBI, IOFD, and all. No, all those things are just grammar. There are only two types. So let's delve into it. So today we want to look majorly into imbalance. There are only two types of imbalance, like I said earlier. And the first type of imbalance that we have is the exhaustion imbalance. Just two types. No grammar, just what exactly it is, what exactly it should be called. Exhaustion imbalance and momentum imbalance. And by the time I'm done with this video, you will see that fair value gap fall under this. Even though it doesn't justify, fair value gap is just more like something that you do not really understand much without understand where it is coming from. Exhaustion imbalance, your order block, the normal supply and demand zone, and the likes, that is what they are. Your order block is the exhaustion imbalance. Your supply and demand, that is your basis, exhaustion imbalance. All right? And that exactly is what we want to treat. All right, so I will start from exhaustion imbalance. That's exactly where I will start from. I'll start from exhaustion imbalance. Go with me. And of course, let's make this bigger so we can have the whole screen to ourselves. Now let's go to exhaustion imbalance. This will not only help you to start picking the right order blocks, it will also help you to have the deep understanding of what is going on. It will help you to be able to refine deeply. And of course, this will be part one as usual because I can't cover this in one video. So this will just be the explanation and the schematic. Why the part two will be chart work, just like we did for structure. That is just like we did for structural analysis. All right. Now, when we are talking about exhaustion imbalance, exhaustion simply means a party is exhausted and the other party takes over. That is the simple thing. But however, every candle on every time frame where you want to pick that your order block, I told you your order block or your basis fall under this category. Whatever you like to call it. Well, your order block and your basis in supply and demand, your rally, the base area, that is where there are interactions between buyers and sellers, all right? They are not in any way different. Nothing like forget breaker block, forget this. Just focus on this and you understand everything you have been trading, every single thing. You will get to understand it perfectly without having to have wrong notion about what they are or having unnecessary argument about what you do not understand. When it comes to exhaustion, it simply means, like I said, a party is exhausted and another party takes over. Now, if I have a candle, a single candle like this, right here, and this is meant to be my so-called order block that I want to mark, or my so-called base in the supply and demand or demand zone that I want to mark. If I have this particular candle, the body of a candle has an open and a close. So now I want to open this candle. That is it. I want to open it on lower time frame. On the time frame where I'm looking at this so-called order block in quotes, on that particular time frame, what I have is this candle. That is what I want to mark as my order block. But I want to open this candle now on lower time frame. I want to study what is happening within it. And let us see if this candle is an exhaustion imbalance. An imbalance is actually a candle, is what gives birth to it. Momentum imbalance is breaking away from such candle. Now, look at this closely. This candle is what I want to open now. So let's say this candle here is on 1 hour time frame. Now, I'm opening this candle and I want to study from its open to its close. I want to study it on lower time frame, like 5 minutes time frame. All right. Now, this particular candle, of course, there will be a certain candle on the 5 minutes. Let's say 5 minutes time frame now. 5 minutes time frame. So what we are hoping is the 1 hour candle story within 12 5 minutes candle. We want to see what happens there. Now, this is the hope one. This is like the previous story. All right, we don't care about that. The major thing is when this 1 hour candle open and when it closes, let's see what happens. So let's assume that it is a bullish 1 hour candle. All right. Now, what happens within its open and its close is what gives us the clue of exactly if it is an exhaustion imbalance or not. So what will happen here, we'll have this. All right. So this particular guy sold first. So as it opened, it keep on selling and selling and selling. Now, buyers and sellers have 3 cycles to make. When you buy something, you sell, you make more profits, you go back to buy back again. If you're a seller, when you sell something, you buy to refill, and then you what? You sell what you bought again. It is always 3 cycles. It's just the way of the market. Physical market, forex markets, no difference. All right. So now, price sold as expected. Remember, sellers have 3 moves to make. They will sell. That is called the short-term investment. They will buy the medium-term investment, and then they will sell back, which is the long-term investment. All right. So here we have it selling first in between the story, and then they buy back the medium investment. Why do we call it medium? You see that the buy move is no matter how little, even if it's by 1 pip, the moment it's clear the eye, the swing guy here. So no matter how little, the buy move is longer than the first sell move. So that's why we call it the medium-term investment. Just follow through. Nothing complicated, but pure value and pure facts. All right. And then what do I say they will do again? After buying and buying, then sellers will come and they will sell again. Now seller cycle is complete. Remember, we are still within the range of the open and the close. That boundary is very important. Open to close. Peradventure, within this open and close, remember, our 1 hour candle is a bullish candle. Between this, it's open and close. Peradventure, even after selling and selling and selling and selling, buyers then aggressively take over. If these buyers are able, before the close, come back and clear the last swing guide that was formed before the third sell, then buyers now took control. Sellers completed their cycle. They sold, they buy, and they sell back, which is the short-term investment, medium, and then the long-term investment. But before the candle closes, the 1 hour candle closes, what happens? Buyers took over right from here, and they bought all the way back to reach the peak price. The peak, the maximum that sellers could go, buyers now took control. Remember, all of these first moves, short-term, medium-term, long-term, are all sponsored by sellers. Now, in as much we are still within the open and the close, and buyers are able to push price above this swing. So if they are able to push price above this particular high right here, as we can see, before the close of such candle, it means that buyers took over. So we can label this first move as sellers taking place, still sellers, and then they completed their cycle. But before that candle closes, buyer took over. That is simply exhaustion imbalance. What happens there is sellers exhausted all their major moves. Everything. They completed their cycles. All their moves are exhausted. And what shows that exhaustion is this buy move. Buyers now took over from them. That is exhaustion. So where is now the imbalance? Even within this candle, that is, now this is where the candle closes at this eye. That's where the candle closes. That is why it closes as a bullish candle, like I pointed out earlier. Now, what is the imbalance? What is the exhaustion imbalance? So even with this candle, the whole range of this candle now, the swing low is this low to this high. That is the whole range, this low to this high. But however, all right, normally I should draw this because they still close a little below, like a little below, based on what I draw this wick, this upper wick that you see here, means that there was a little sell before the close. But that doesn't matter. You get it, you understand already. All right. Now, majorly, these buyers took over from sellers after sellers completed all their cycle. That's a pure exhaustion imbalance. And therefore, where is the exhaustion? Where does it start from? Let us change the color of that. Where does the exhaustion start from? Where is even the area of interest within the same candle? Of course, it is where buyers took over, which is this eye. where buyers took over, all the way to the least low that sellers pushed price to. That is exhaustion. So within this range, inside our candle is our exhaustion imbalance. Now, what is the significance of this? The significance of this is that if this is the nature of this candle that we have here, and you are on this 1 hour time frame, no matter how big the so-called fair value gap is above this candle will be touched. Price will touch it before your continuation. So you looking at momentum above it as fair value gap and thinking that's where price will retrace to will get you lost, because this is the nature of this candle is an exhaustion imbalance. For an exhaustion imbalance, price must touch it. Not just touch it, price must touch this high here where buyers took over. Price must touch it inside that candle. That is exhaustion imbalance. Exhaustion imbalance must be touched. If that is the characteristics of your order block, it must be touched. If that is the characteristics of your, whatever you want to call it, supply and base, in your rally, base rally and all, it must be touched. If this is what happens within that particular candle, that's exhaustion imbalance for you. So that is why at times you might mark fair value gap and you see that price retrace deeply, even if it is your BISI and the likes. You see that price retrace deeply to ensure it goes ahead to touch the candle. Because the nature of the candle or the reaction, at times it might not just be a candle, it can be week to week like this. Maybe 2 candles, 2 bullish candle. So it can be week to week, from this week to this week. So you want to check. What you still want to check is still this particular latest candle or the upper week. The upper week is different from lower week when it comes to this particular reaction that we are talking about. So in order to pick your exhaustion imbalance, I believe that is very clear. Remember, exhaustion imbalance must be touched if that is the nature of that candle below or above your so-called fair value gaps. I believe you are learning. Now, let's look at the second case. And in part 2, where we'll be looking at more examples, you will get to see how this plays out. But I want to give you an assignment. After you study this video over and over again, go back to your chart. Start looking at cases whereby price seems to test fair value gap without touching the candle below or the order block below, or that case where price meets your entry by a little pip. You will see that what you will see there will be momentum imbalance. If it is exhaustion imbalance, it must have been touched. And also, do note that the best chart to use for analysis is the futures chart of a currency. What you think is not touched on your currency chart will be touched on the futures chart, because futures chart is backed up by real liquidity and it gives much more accurate pricing. All right, it gives much more accurate pricing. So that is, by the way, I will talk in the future, maybe the next series, I'll talk about futures charts versus contract for difference charts, which is your CFD chart. All right, let's go to momentum imbalance. I know this is the part you all know. Everywhere on the internet, FVG, fair value gaps. All right. What is fair value gap? Fair value gap is simply when there is an absolute control from a party towards a direction. And from that definition, you can take a guess. What guess can you take? The guess you can easily take here is to know that let's have our candles again. But in this case, to give better understanding, let me draw a series of candles. All right, let me bring that into the frame. All right, Now, let's bring series of candle in this case so that we can have a better picture. They have candle 1. And then we now have our base candle or your order block or whatever you want to call it. And then we now have another candle. This is a bullish candle, another bullish candle here. Don't mind the drawing. Another bullish candle right here. And then maybe another one. And price started coming back. Price started coming down. What we want to study here is, will price touch this base candle or this other block? Or will it not? In this case, we want to study a case where price will not touch that candle. And also, I will refer us back to the exhaustion imbalance to let you know that surely price will touch this candle even though you have marked this fair value gap. That is between this high and this particular low. All right. Now, the nature of this candle is what we are interested in now. All right. Let's use 1 hour time frame again. Let's open that candle on lower time frame. Let's open it. We have the open and we have the close of this particular candle. In this hour candle, what happens there? Let us see. What we have there, I mean this small candle here. What we have there is price coming and then price clear the high first, bullish. Remember they have 3 cycles, they clear the low, they met the targets, and they close like that. This right there is momentum imbalance. Momentum imbalance is a situation whereby, so till the close, and till the close, and like this, and like this. Momentum imbalance is a case whereby buyers complete their cycle. They push up at the open of that candle, they push down, and then they win the target, their long-term investment. This right here creates a momentum imbalance. And therefore, price is not expected in any way to come and touch this high. It is not expected on that time frame where you are spotting that imbalance. It is not expected to. You will see this clean candle on this same time frame where you see this clean candle. No matter how far this pullback push and push and push, in that case, your area of interest is this low and stop loss maybe at exactly this line. It is not meant to touch it. That's the reality. So momentum imbalance is buyers or sellers completing their cycle and keep going in their direction without violating, without getting their low violated until that candle closes. It could be on this even candle. It can even be, the momentum imbalance can be on this particular candle here. Very possible. This major momentum candle itself. It can be there. At its open, we could have the same thing, and then they complete their target, and then they keep going up until they close. So this candle right here, from the point of their complete cycle, that high, remember, in the case of exhaustion imbalance, high or low will be touched. So from that point, this is a pure momentum imbalance, and therefore this high is not meant to be touched at all. I mean, we now understand respect to ICT, but this, I want you to call me a liar. Go and study what I've taught you here so far, this simple video. Go and check even cases where ICT himself mark fair value gaps, and then price still tap the candle, the high of the candle, maybe a little below the fair value gap. Go back in time check the nature of that candle. You will see that it must have been exhaustion imbalance nature. And in cases whereby truly the fair value gap was purely respected without price touching the candle below or above, just the area of the fair value gap, go back in time, check the nature of that candle, and then you will see it is momentum imbalance. Do you want more on this? Then of course, you have to use that subscribe and follow button for part 2. And I will see you guys in the next one.